Happy 2020, everyone. Rosa Helen here with Intera Real Estate. Wow, what a market we're already seeing. Buyers are out, open houses are busy, and we're seeing multiple offers again. Are we seeing the spring market already here in January? Well, it appears so. We continue to have low inventory in January, and with the frenzy of buyers that have come out, it's really created a heated market. For this month, I want to share a video with you, and it's about market forecasts, and it's got some upbeat information. And here's what the president of Sequoia Wealth Advisors has to say.
I'm going to start with the big overview. We are not going into a recession for the foreseeable future. Is everybody ready for that one? Come on, clap. It's good news. Now here's a giant caveat to that. The information changes monthly. So I might tell you a different story next month. Highest probability at this point, if you may not realize it based on how the stock market is performing, but we're actually in the midst of the third significant slowdown we've had since the financial crisis. We had one in 2011. Stock market dropped a lot during that one, almost 20%. We had another one in 2015, and we're about halfway through at this point, the third one. The reason it's not a recession is GDP hasn't gone negative for 2 consecutive quarters, and that's unlikely to happen this time either. But we are in the midst of it. The only thing holding up the economy right now is everyone in this room spending money. You and the other 320 million Americans that are doing it. Because manufacturing is slowed down significantly, industrial slowed down significantly, a number of sectors have slowed down significantly. Some of this is around trade, concerns around trade. A lot of it's around currency and a number of other factors. But consumers are spending like crazy right now. And believe it or not, consumer spending is holding this whole thing up. That's why the stock market's making new highs. That's why the companies are feeling better. But don't get too excited about that. I do want to share the fact is that when the data starts coming out, what we can see starts being posted, we will get a lot of stock market volatility. We'll prepare you for it. It will be a bumpy first half of next year. Don't worry, at this stage it means nothing more than, how many remember last year when I gave this talk? Remember? Everything was in free fall, okay? You might get a little bit of that, but you see how short-lived it was? Remember what I said too? I said, stay put, we're not going into recession, it's the Fed. It'll turn around, and it did very quickly actually. It took 3 months to drop, it bottomed out on Christmas Eve, it took 3 months to go back where it was. So you may see that, it may be choppier, but it's going to be a little bit of a rocky time. In addition, it's an election year. Any negative economic data is going to be pounded on the news. Why? There's a lot riding on it. I will get into that in more detail in a few minutes. But that being said, it's going to sound worse than it is. I watch these data very, very closely. I've done this for many years, and it's served my clients well. So I watch it. What's in the news has already happened. What I'm looking for is what's likely to happen in the future. At this point, again, subject to change, my clients will be told if there's a change in this one. At this point, 2020 first half rocky, second half things are picking up. 2020 things should be picking up pretty well. 2021 should be a pretty darn good year, based on data as it stands now.
So there you go. That was a great video from Kristina. I'm feeling fired up about 2020. As always, please reach out if you're thinking about buying or selling real estate in your near future. And also to help my visibility, if you can click on the like button or subscribe to my videos if you're enjoying them. Thanks so much for watching.